Welcome to Nichols Tax Update Podcast, issue 2143. This program is produced to provide current information about developments in United States tax law. Yada, yada, yada. There's the regular standard disclaimer. But what's really important is in the third paragraph, because I acknowledge the value of my subscription to Tax Notes Today. I wouldn't even try to produce this program without that. Every morning, with the coffee, I read Tax Notes Today, published by tax analysts, in my opinion, the preeminent source of information for the true tax professional. What's in this week's edition? 6 topics. Most importantly, perhaps, the new frequently asked question process includes penalty protection. You've heard me talk about that in these programs more than once, that the FAQs would be a lot more valuable if I knew that the IRS would accept my reliance on those as substantial authority. We'll talk about that here in a minute. Next, an accumulation of earnings case. What? Yeah? A low corporate tax rate has us back to the 60s. We haven't had an accumulation of earnings case in at least 4 decades. How do you make a valid research credit claim? I don't know. But the IRS undertakes to educate me with 22 pages of text and 3 pages of endnotes. The research credit just hasn't been part of my practice. We'll talk about that development. Next, a partner did not challenge IRS assessments at the proper time. He lost his right to challenge them, and by the time he woke up, the IRS had filed liens and was preparing to execute a levy. Then I call it revisiting the Madoff rule. Does it apply? Did it apply? Is a theft law, is a loss on a bad investment because managers are frauds, is that a theft loss? And then one more thing. I've been talking about conservation easements here last week. I warned you about developments in conservation easements, and I've been ringing what I thought was a good alarm bell for several months, if not years. The things just don't work. Well, let's take a look at what the IRS has to say about the FAQ process. You can rely on frequently asked questions and the IRS's answers. The IRS has released guidance and will release additional guidance on developments in the tax law using frequently asked questions. If a taxpayer, and the taxpayer's advisor, by the way, relies on any FAQ in good faith, and that reliance is reasonable based on the taxpayer's facts and the law, the taxpayer has a reasonable cause defense against negligence penalties or any other accuracy-related penalty. This answers concerns that a lot of us have had about the authority of FAQs that are now the IRS's favorite tool for explaining new law and announcing their position on numerous issues. Can we rely on them or not? FAQs on newly enacted tax legislation and then later changes to those FAQs, because we've had that, will be announced in news releases and posted to the IRS website in a separate fact sheet. Those fact sheet FAQs will all be dated so taxpayers can confirm when changes were made. And you're writing a memo, hopefully, to the file, so you've got the date you made the decision, the date you consulted the FAQ. Earlier versions of fact sheet FAQs are going to be on the website, so taxpayers can find the version they relied on if they need it. Go to News, Release, and Fact Sheet Archive at the IRS website. Piling up cash? Alta Peruvian Lodge Limited, ski lodge in Alta, Utah, has been assessed $495,826 as a Section 531 penalty on its retained earnings. Now stop for a moment. That's not exactly how 531 works. 531 works to assess a penalty on my current earnings if I already have enough retained earnings to fund my business and I don't pay out my current earnings in the form of a dividend to shareholders. The IRS in this case is the assessment is 20% of almost $2.5 million. which is alleged to exceed the needs of the business, and I'm not sure the revenue agent got it right, but we haven't seen, nobody has seen a Section 531 case in at least 4 decades, because the relationship between individual and corporate rates didn't provide any incentive to avoid dividends. We paid dividends that were taxed at a very favorable rate. That changes when the individual rates on investment income far exceed the 21% corporate income tax rate. And so it's possible that we need, in our review of C corporation tax returns, one of the things we need to be checking for now is there a retention of earnings that exceeds the reasonable needs of the business, so that the current income should be paid out in the form of a dividend. Everything old is new again. The research credit, well, follow the instructions. Field attorney advisory. We don't see a whole lot of those. Number, of course, that 2021, that's the year and all that. The IRS tries, but I'm not sure they know how to explain how to file a claim for refund or credit of the Section 41 research credit. 22 pages of careful instructions, supported by 3 pages of references that are cited in the text. You can't get through the 22 pages without referring to one technical reference after another. But the good news is there are CPAs who specialize in these claims. Wisdom suggests to me that I should find one of those, and if I have a research credit project, I should refer that project to a CPA that knows how to see it through to successful completion. In the case of Ronald Goldberg, TC Memo 2021-119, he was asleep at the switch. The IRS audited and made adjustments of the income of 2 oil and gas partnerships in which he was a partner back in 2017 and 2019. He failed to challenge those adjustments at the time that was provided by law, and then he failed to challenge a prior notice of federal tax lien. So now he's got a petition filed in tax court to suppress the levy filing. Tax court Judge Elizabeth Ferris was not sympathetic. She found no abuse of discretion by the IRS, and she sustained a levy to collect the unpaid taxes, penalty, and interest. Got to pay attention. If you're a partner in a partnership, the partnership's audited, you get the mail. That's because you have some rights. In the dealing with the IRS audit as a partner, you may have certain rights. You need to make sure that you don't miss exercising those rights. Investment loss is not a theft. Edward Smith, and I love this little cartoon. There's the investment loss there on the left, and the taxpayer with a question: is this a theft? I trusted these promoters of this corporation and I bought the stock. But it turns out the promoters are frauds and my stock is worthless. Well, I've certainly been a victim, and I've been a victim of theft. But that particular theft is just another risk of investing. The risk of dishonest management is just another investment risk. Your loss is a capital loss. Get out your copy of the Internal Revenue Code and read Internal Revenue Code section 1211B. That's where we can figure out what we need to know about your loss. Yeah, it was theft loss, but it's really a fraud loss, and it's not deductible by the individual as a theft loss. One more thing. I've been talking about the IRS challenges to conservation easement deductions, and taxpayers are losing this left, right, and center. Fees are being paid to lawyers that hold out the hope that they may have some magic formula, some special wording, something that they can pull the taxpayers out of the quagmire of their own greed. And appraisers, expert witnesses, but the taxpayers who wanted nothing more than a tax deduction. They just wanted to reduce their tax liability. And they were told this would do it. But again and again and again, these promoters show up and their siren song is, breed the horse, print the book, buy farmland, and then we'll get an appraiser to appraise it for 100 times what you paid for it, and you can give it away to charity and get a tax deduction. That defies logic. What's amazing to me is these deals are still being marketed, and that's why I include this. Be on guard. Encourage it's your high income clients. It's your very best clients. They're going to be solicited by this and other tax shelter promoters. If it isn't this, it'll be something else that has to be kept secret. There's only one law firm knows how to do this, or it requires what you should think of as extraordinary risk. If you can get your client to take a deep breath, please do so. Saves all of us a lot of trouble. Until next time, I really appreciate your supporting this little program. I enjoy it. Send mail. Send an email. Send questions. I love to get questions and answer those for the members of the South Carolina Association of CPAs.